we could be in production in 2025. In Clayton Valley, we have a neighbor who's at a feasibility study right now, and the economics look quite favorable. And we have an identical deposit. We have the same grade, the same tonnage, and we're right next door with all the infrastructure in place. Every single major auto company is ramping up on electric vehicles. People have been talking about this for several years. It's happening.
Welcome to Crux Investor. We spoke earlier today to Tucker Barrie, who's the CEO of Noram Ventures. He wanted to talk to us about lithium clays. They've got their project in Nevada. They took us through how they're developing the business with small amounts of cash coming in regularly. They're about an $8 million market cap, so quite a small one, but relatively interesting. We discuss a bunch of different topics, so look in the description below to look at what they are. Click on the relevant timestamp and that'll take you to that part of the video. If I can ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, please click the notification bell. Anyway, let's hear what Tucker had to say. Hello, Tucker. How are you, sir?
I'm doing well, thank you. Yourself?
Yeah, not bad, not bad. So I appreciate you coming on the show. We're going to learn a couple of things today. One, about your new venture, Noram Ventures, but two, you've also kindly agreed to get a little bit technical with us about something called lithium clay. So thank you. If I may ask, could you kick off with a 1-minute summary, just overview for people on Noram Ventures?
Okay. Noram Ventures is a TSX listed company. Right now it has a market cap of $8 million Canadian. And we've just finished a drill program in Clayton Valley, Nevada, where we have a resource, and the resource is expanding with every drill program. Noram, I'm in Ottawa. The main part of the group is in Vancouver, and that's where our accountant is, board of directors, and they're the group that kind of brought me in about a year ago.
Right. Okay. Thanks for that. Look, given it's such a relatively, I know you've got a resource, but it's a relatively small company, and just to get people comfortable with, small companies, we like to talk about the management team's experience. So, could you just talk us through that? We had a look at the back. Some names there are recognized, but maybe kick off with yourself. What's your history and track record?
Yeah. So I'm a fairly experienced economic geologist, Canadian-based, but much of my work has been in North Africa, Central and South America, for base and precious metals mostly, but also more recently for strategic metals like lithium. These guys in Vancouver, I saw that they had a deposit that was developing, and I contacted them, and they got me involved as a consultant. And then about a year ago, they asked me to come on board as president and CEO of the company.
Right, and so it gives your lithium track record. So just so I understand that, or is it more from a technical perspective?
Right. So just before I came on with this group, I was doing research in lithium. I actually had a master's degree student at Cornell University, and we were looking at lithium brines right next door to this property, in fact. And we ran through that thesis. It was a very interesting thesis. That company is doing reasonably well. It's called Pure Energy. And that's what really got me interested in Clayton Valley, this interior basin that has lithium brines, and also very notably has these lithium claystone deposits.
Okay, we're going to talk about the lithium claystone component in a second. So again, who else is on the team with relevant experience, whether that be in junior mining or specifically with lithium?
Are you referring to companies?
We sometimes get management teams who've got big company experience and they come in and run a junior, and it just goes to pot because the drivers and the dynamics and the risks are all very, very different. So I'm just trying to understand your team better, because I say there's a $8 million company. Have you got people who are used to driving that? Certainly on the finance side, it's very, very important, or specifically on the lithium side, coming in and delivering value there.
Right. So from the team's perspective, we have a board of directors, including Art Brown, who's the chair of the board, Mark Ireton. Mark has banking experience. Art has experience in the markets for the junior mining sector. He's been through a few cycles, had some real successes. Mm-hmm. And there's a financial backer named Sandy McDougall, who's actually a friend of mine, who got me involved in this project. He has a significant position in the company, and also has had success more in the energy sector. So those guys brought me in. They brought me in because of my technical expertise, because I'm very interested in lithium. but also I have a track record in the exploration and development of mineral deposits in a general sense. Some successes in North Africa, for example.
Okay, what were they, if you don't mind me asking?
Yeah, so I spent a fair bit of time in Eritrea, Sudan, Ethiopia, and Egypt specifically, and I was involved with a company called Nevson Resources during the discovery days of a very large deposit called the Bisha. Now it's a mine, not just Bisha, but several other deposits on the property. And that's been operating now for 5 years. It's a quarter of the GDP for the country. It's a very large and important deposit.
Yeah, it definitely is. Wow. So let's talk about financials at the moment. So I know you raised some money in November. It was a small amount of money. How much have you raised to date, and why did you raise that money in November? It's non-brokered, wasn't it?
Right. Over the course of 2019, we raised about $750,000. We completed one drill program, and then in November, we completed a second drill program. And for that second drill program, in total, we raised about $420,000. The last raise was a smaller raise of $120,000 just in late November, December. We also have had some warrants and options coming in, so we're good for the next 3 or 4 months, pretty clearly. But we're going to go back to the market again pretty soon.
Okay, so you're doing like small incremental raises. It seems that's not a lot of money that you've raised so far, but it's allowed you to put out a resource. I note. Is that the plan to keep, just go out and take as much as you need at any one time, rather than go and take a big chunk of change and be done set for the next 2 years? I mean, is that the thinking?
The reason is our share price has been lower, and so we only take out as much as we need to, so we don't get diluted too much. Our share price has followed the price of lithium, and the price of lithium has bottomed out. It's basically at its bottom by all accounts, and over the course of 2020, it's predicted to rise.
Why do you say that? Why is it predicted to rise?
It's mostly it's due to, of course, the electric vehicle market. And if you just look at Tesla over the last week or 10 days, it's almost doubled in price since December. And they've turned a corner. They're quarter by quarter. They're meeting their milestones both in China and the United States. And Tesla's only one automaker that's getting involved in the electric vehicle markets. And so the prediction is it's true, and it's following very closely to what predictions are. There's going to be a 10-fold increase in the amount of electric vehicle battery need, and the electric batteries are based on lithium-ion batteries. So that's very good for the price of lithium. Supply demand is another question, but it seems to be reasonably balanced. But the price of lithium will rise to maybe 30, 50, 70% of what it is right now over the next 5 to 10 years.
But you're quite early in the cycle. You're young company. You're early stage, and mapping yourself to that growth or any of those imminent cycles is surely a bit premature at this point. You've got to, I think, help investors understand where you sit, where you're at. So maybe we'll come back to that in terms of the supply demand thing, because there's a much bigger conversation to be had there. But maybe let's just try and understand what this lithium claystones are about, because I'd certainly not heard it until you mentioned it to me. So right. it was new. But it has some of the properties of brine and some of the properties of rock. So can you give us a little bit of a technical background? What are they, and what's so attractive about them, first of all?
Yeah, I guess to preface this, now there are 3 types of lithium deposits. One is pegmatites, where spodumene is recovered, and that's a little bit of a separate track. And then the other 2 types are brines, which is like 60-70% of the total lithium market, and concentrated mostly in the Golden Triangle, quote unquote, in Bolivia, Argentina, and Chile, and also in Clayton Valley in the United States. And then the third type, just in the last 3 or 4 years, people have come to realize that near those brines, on the margins of those brines, are clay deposits, and the clays soak up the lithium. Sometimes they soak it up as lithium salts, so the salts are inside the claystone itself, but really the lithium is in the minerals, the clay minerals themselves, and so there are substantial resources for lithium. In fact, an equal or greater amount of lithium is preserved in claystones around the brines as there is in the brines globally. It's a huge resource, and it's right now it's untapped. There are 3 or 4 deposits in Nevada and also in Mexico that are at a development stage. Some are at feasibility, some are not quite at feasibility, and we're actually one of those situations.
Okay, so let me say, untapped, to me, I got to ask the question is, does that mean no one's found a way of economically or commercially being able to extract the lithium from clays?
Yes, that's a reasonable assumption when I use that phrase. The best example right now is a company called Lithium Americas that has a large claystone deposit in northern Nevada. It's called the Thacker Pass deposit. They're at full feasibility study. They published their full feasibility study, and they're 3/4 the way through all their permitting on a very large lithium claystone deposit that's 10 hours north of where we are in Nevada. We're more in southern Nevada. And what they've done is they've developed pilot plants to take those claystones and process them, and they're in the process of marketing little vials of lithium carbonate. Lithium carbonate is the marketable product. If it's 99.5% pure or purer, then it's a marketable product. And they're shopping those around to see, which battery manufacturers can use this, Panasonic, other battery manufacturers, and they're having success with this. So they basically demonstrated that the pilot plant process works for extracting the lithium from their claystone. There's another company called Ioneer Resources. They're only 40 miles to the west of us, and they have a lithium boron deposit. The processing's a little more complex because they have 2 commodities they have to get out of the lithium and cerulite. It's a borate mineral, and so their processing event is not quite as advanced as Thacker Pass as Lithium Americas, but they're also shopping around their 99.5% pure lithium carbonate vials, and so in Clayton Valley we have a neighbor who's at a feasibility study right now, about ready to publish a feasibility study. They've gone through all the engineering aspects of developing their claystone deposit, and the economics look quite favorable. And we have an identical deposit. We have the same grade, the same tonnage, and we're right next door with all the infrastructure in place. So we feel we have, an economic situation here.
Okay, right. Okay, so some people have demonstrated at pilot plant level the economics could be there. Obviously, to take it further into full plant scenarios, got a ways to go and a bit of money to raise. We talked to some lithium companies who can't even finance the pilot plant, let alone the full production plant. So it's an interesting space at the moment in terms of where there's great. I agree with you about the macro story. Clearly, there's a great macro story. It's getting people to put the money up now to be able to allow people to get into production. You're not anywhere near that. So in many ways, you're probably at a better place than them. In some ways, you could argue. So you're taking comfort in the fact that some people have created an economic scenario for their clays, which will produce 99.5%. Spodumene? Is that what do you present?
Well, it's lithium carbonate.
Lithium carbonate. Sorry. Okay. So they're producing 99.5% lithium carbonate. Sorry. Okay. Right. So there's some comfort in that. So we understand the clays a little bit more. So thank you for bringing it to our attention, first of all. So let's talk about where you're at. Okay. So small market cap. You've got a little bit of money. You're going to go out to the market and raise some more money in the next quarter or so, or the next couple of quarters, to do what?
That's correct. So we're going to raise 1 to 1.5 million for another drill program to expand the resource and also de-risk it a bit in terms of bringing the commodity from indicated and inferred resources up into measured and indicated resources. That's fairly straightforward. This is an old lake bottom. It's just a claystone deposit that's horizontal, 50 to 100 meters thick, and it's drilling it off on a grid. It seems to continue, not forever, but on a kilometer scale. So we need to drill off another third of the property to increase the resource and increase the confidence in that resource.
Right.
That's part number one.
Oh, so Karen, and there's more? What next?
Right. And so part number two is to get into the engineering studies. Part of those engineering studies are about mine plans. Where does the pit go? Where do your tailings go, et cetera. That's fairly straightforward, especially in a place like Nevada that's very used to mining. We have to find out about initial permitting too, get back baseline studies for environmental permitting, et cetera. And then we have to get involved in the chemical engineering side of things. We can follow in the footsteps of Thacker Pass or Ioneer or our neighbor Cyprus in terms of the chemical engineering, or we can look into other methods. And there are some interesting other methods out there in terms of processing, both the main part of the chemical processing and also at the refining and polishing stage to get a really refined product using membrane filtration, ion filtration, and other techniques.
Okay.
There's one other aspect that hasn't been considered by our neighbor, and that's pre-processing. And so these clays, I'm going to go into a little bit of detail
Please
here,
do.
but the clays, it's not pure clay. It'll be pure clay in some places, but often they have sand and grit within them. And the sand and grit is composed of quartz and feldspar. It has no lithium in it. And there are ways of taking that claystone and, immersed, and either over a shaker table or through something called a hydrocyclone, you can separate the clay from the sand and gravel, get rid of the sand and gravel, which effectively ups the resource by 50 to 80% in terms of its grade before taking it to the next processing level. And that can be very economical in terms of extraction of lithium for these clays.
Okay, so you've got an idea of what you want to do with the money you're about to raise. So have you got a sense of what amount you're going to need to ask the market for?
Right, we're looking at $1 to $1.5 million in Canadian funds, which is less in US and less in pounds, to get us through the next 18 months, to get us through these engineering economic studies as well as a drill program.
I've got to ask. I mean, you don't seem to be burning through a lot of cash. What's the money being spent on? What's the burn rate? I mean, are you guys paying yourselves?
Well, we're being very cautious about that. But the other thing that people don't fully understand is this is a claystone deposit it's essentially not lithified. It's not rock. And so the drilling is really very inexpensive in comparison to other drill programs like for gold or for base metals, for example. We pay less per meter all in for the drilling that we conduct than other programs do for the equivalent amount of gold, for example.
Right. Okay. And if I may ask, what is the burn rate? If you're spending $1.5 million over the next 18 months, the burn rate's obviously less than $100,000 per month. So what's it going on?
That's about it. The group in Vancouver is one of 3 companies in the same office, so there's lower overhead there, and then we take care of compensation on a marginal level right now until we get over some hurdles where we have proper financing and we can get proper compensation for individuals and companies. So yeah, we're pretty tight with our budget right now.
Right. And what are you paying yourselves in cash or just shares?
It's been cash exclusively so far, but
right.
We may end up having to go to shares over the next year or two.
Right. Okay. Well, we'll come back to that if we speak again. Okay, because I'm always interested in how people remunerate themselves at this stage of development, because you want it all going in the ground clearly, because it has more impact. That's what the next round of cash is going to be looking at. Okay, so that's $1.5 million. So can I ask what do you think that you're going to be able to create with this $1.5 million? You're going to have a bit more data. You're going to have a slightly bigger resource. One would hope, right? And you've got it with your engineering, chemical and otherwise. You're going to have a better sense of how you process this and what's going to work and what's not going to work. But what do you think the market's going to need to hear from you given it's lithium, lithium's not getting much of a fair hearing at the moment, okay, for whatever reason. Like I say, we'll stay away from the macro argument of supply and demand for now, but what do you think that you're going to need to say to the market in terms of where you are in the cycle compared to others, which is going to get people's attention to fund you? Because as I say, we've been speaking to people who've gone all the way down to we now need, I won't say the number, but X millions of dollars to build a pilot plant, and they can't get financed by anyone. So how do you talk to the market? What are you going to say?
So the next funds will increase the resource by at least 50%. And they'll also they'll de-risk it by bringing it up into measured and indicated resources, which can be converted into reserves with definitive feasibility.
Does anyone care about that? Does anyone care about that right now? I mean, when you talk to people, do they care?
It's an important step, and it's a necessary step, and now is the time to do it. So that's what you have to do. As well, we're going to test some innovative chemical engineering aspects, but we're going to focus on using a sulfuric acid bath, like other companies, to get into to finish off a pre-feasibility study over the next 2 to 3 years. So we're going to get started with those chemical engineering studies, along with the other mechanical engineering, if you will, the mining engineering type of studies, and that'll take us to the next level. We expect that the lithium price is going to rise continually toward 2025. If we have luck to keep moving things forward, we could be in production in 2025. And right now they're talking about prices that are literally 50% higher for lithium carbonate in 2025 as the electric vehicles really start to take off.
Okay, so what do you think the things are that you need to tell the market to persuade them that yours is a project worth investing in? Okay, obviously, we're talking about lithium claystone. Okay, so that's, even with my institutional days, no one came to me with lithium claystone. So, it's a new one. So you need to, make people comfortable that there's an economic solution to that it is going to be able to make enough margin between what you can sell it at and what's going to cost you all in. So that's a story which is developing by the sounds of it with others, and you're going to need to tell your version of that story too, presumably.
Right.
Yeah. And do you feel comfortable with that?
So really what we have are a lot of components of the puzzle. And the components come from Lithium America's Ioneer's successful pilot plant studies on very similar claystones. So effectively, that technology is proven. We have next door on an identical deposit, Cyprus's engineering studies, and their pre-feasibility study. They estimate an OPEX of $4 per kilogram of lithium carbonate produced. And lithium carbonate selling for $8.75 per kilogram right now. So less than half of that will go toward the operating expenditure, according to Cyprus's study. We aim to improve on that with our engineering studies. And so really it comes down to what's the CapEx for these. And the CapEx is largely governed by sulfuric acid plants on site. What you can do is you can buy sulfuric acid for 2 years, which cut down that capital expenditure for the first year, or at least the first 2 years, or at least delay it, and then bring on sulfuric acid plant into your operations as a capex once once you have income from the mine and from production of lithium carbonate. And so by working with those types of economics, you can be competitive with someone like Cyprus, our neighbor, or competitive with Thacker Pass or Ioneer's Rhyolite Ridge projects also in Nevada. So.
Right. Okay. And then I guess the next thing you're going to need to show people is you've got the scale for this. This project has the scale. You've got the technical know-how. People are going to give you money to build a pilot plant, the demo plant, and get into full production. Yes. Because you think you're timing this right, is what I'm hearing you saying to me. You think that if you can get into 2025, you're going to hit it right.
We believe so. I should mention something about the scale. Right now we have 200 million tons of resources that are outlined, and sizable deposit, surface mine, no blasting, low operating costs, and if you take the average value of lithium carbonate equivalent in the ground, it turns out to be $51 US per kilogram of our per a ton of material mined. So $51 per ton, that's equivalent to a gram of gold per ton. Okay, and if you think about a 200 million ton gold deposit at a gram per ton, that's 6.2 million ounces of gold. There's a lot of gold mines operating under exactly those circumstances that are making an awful lot of money, that have the same capex we're envisioning, that have a higher opex than what we're envisioning. And so what we're trying to do is make people aware that the economics of this is actually pretty interesting. Here we are in the state of Nevada, which is one of the most favorable mining jurisdictions in the world, where they have there's a half dozen deposits right now mining a gram per ton surface gold elsewhere, just in the state of Nevada alone.
Yeah. So tell me this, with you and your board, given the stage of development that you're at, I mean, there's a lot of things you don't need to worry about yet because you're a couple of years away from getting anywhere near needing to worry about large capex programs. But today, as a junior miner, just share with the viewers of this show, what are the sorts of things that you think, oh my goodness, I need to deal with this. This is the most important thing, the longest pole in the tent, as it were. Is it just about getting cash through the door? Is it the technical know-how? I mean, what is it?
Well, so with other deposits, base metals, gold, I have a lot of experience in that. A lot of the risk is in the deposit itself. What are the vagaries of the deposit? Is this vein going to blossom out? Is it going to be narrow? That's not the question here. This is a lake bottom that goes for kilometers. So there's almost no risk in that. And that is really quite interesting. That's one of the reasons why I got involved with this project. I'm a geologist. I like the risk, but that risk is almost taken away. And so all of the risk really is in this processing. And the processing has effectively been demonstrated to be economic. And so that is the word that I'm trying to get out now, that Lithium Americas has had success. They're marketing 99.5% pure lithium carbonate from their Claystone deposit. They're probably going to go into production in a year or 2 years' time, provided they get their capex funding in place. They're through their bankable part of their bankable feasibility study. Ioneer, an Australian company, very much the same with another deposit in Nevada. So no geology risk effectively. All of the risk is in the processing, and the processing is there. So that's the word that really needs to get out to people.
Okay, so let me see if I understand that. So you're saying this is, the bottom of a lake. You know where it is. There's nothing complex in it. There's no real kind of guesswork as there would be chasing veins, etc. You know where it is. It's a case of scooping it out. You believe there are processes which work and processes which you think you can improve. You just need to understand the extent of this resource. And clearly, obviously, grade is always king, and no matter what you're dealing with here. You think you can, indicative neurology indications suggest that the margins should be there for you. You're trying to paint a very simplistic picture of this thing, but have I represented or captured what you've tried to tell me today?
Effectively, yes. It is in some ways pretty simple, certainly from a geological perspective.
Right.
And then also, if you think about the component pieces that are taken from three examples in Nevada with Claystones, they all point in a very favorable direction. People are marketing the lithium carbonate they're producing, and they're going through the final stages of feasibility. Thacker Pass has gone through 3/4 of its environmental permitting, mining permitting. They're really turning the corner. And our neighbor Cyprus is going to come out with a pre-feasibility study later this month, that I'm sure will have favorable economics, especially for the operating costs.
Well, or at least certainly some clues as to what you may have as a consequence. Look, Can we just talk about the macro for a bit here? Because obviously, people understand brines, nice, cheap, low cost, high margin, etc. Even the brine company, people producing lithium carbonate from brines are struggling at the moment. The demand isn't there today. It's not there. The price isn't there today. And we've talked to some pretty big companies who are all just hunkering down a little bit and they're not quite sure why the price demand isn't there at the moment. So what do you say? Because the other thinking, if you look at some of the big reports from some of the big banks, they're suggesting that actually once the price does come back, you've got all of these big producers today who can turn the tap back on and make it very difficult for people like you, even in 2025, to find your place, your niche in the market. How do you react to that?
Right. Okay. There's two parts to your question. The first part is, the price now is bottoming out. Why is the price bottoming out? And really, what happened is in early 2019, China pulled back on their subsidies for electric vehicles countrywide. Mostly it was buses, but they pulled that back, and all of a sudden companies making buses in China started cutting back significantly as well. And that's what helped really drop the price down, especially in 2019. China, they can't pull it back anymore because they withdrew most all the subsidies. And now what you see is Tesla's factory in China is incredibly successful. Tesla is also successful in Nevada with its gigafactory and full production, and they're meeting milestones, and that's just Tesla. Every single major auto company is ramping up on electric vehicles. People have been talking about this for several years. It's happening. It really is happening.
I hear you.
So demand is certainly increasing. With regard to the brines, Albemarle, our neighbor in Clayton Valley, SQM and other companies, Ganfeng Lithium, they've pulled back on their production in the solars, and also they've significantly cut back on the spodumene production, Greenbushes in Australia, and other pegmatite production elsewhere in Australia, and even in Canada, Kwabuchi, for example, for Nemaska, they're almost bankrupt right now. So that's been a real problem. A little bit of a market perception there too, coming from Canada because of Nemaska's very difficult financial times right now. But spodumene aside, just thinking about the brines, which is the majority of production, the larger companies have curbed their production, but it's not that easy for them to increase their production because they're under stress about how much brine can they use from governments, from Chile, from Argentina. Bolivia has very large deposits, but they're not even in production. And they might not be in the foreseeable future because strong socialist government, they're up at 4,000 meters elevation, strong local groups that are opposed to mining that brine in some places. And also their brines are complex chemically. And so their processing is much more difficult than the brines in Argentina and in Chile. So, the brines, those resources are there, but they do have limitations. And a lot of them are social and government controlled in terms of how quickly they can ramp back up. And that all things considered, if you listen to the experts, they recognize that. And they see that even with the ramp up in demand, the supply can more or less match that demand, but there's going to be a deficit around 2024 to 2025, and maybe for another 6 to 8 years, where the price is going to reflect that, basically.
Okay, so you feel you know where you're going to fit in this market. You think there's a place for a company like you if you continue to deliver on these moments,
right? And so
discussed today.
Well, moments 2023 and on, because once we get into production, we'll be in production for 40 years. Even though this is a large deposit, it's not that much of the lithium market. We're talking a goal of 20,000 tons lithium carbonate equivalent production, which would be 2% of the market or less, especially as things ramp up toward the end of this decade.
Okay, interesting. Okay, Tucker, thanks for that. That's a great first introduction to the company. I do want to know more. We have to go away and do some research on this lithium clay stuff we've been talking about today, but it's always interesting to hear young, new stories in the market, talk to people and understand their experience and their capability of, delivering all those lovely milestones that shareholders need to see when you haven't got that much cash, but you seem to be watching the pennies, as we say here in the UK. Appreciate your time today. Thank you very much.
All right. Thanks very much.